Your roadmap to the latest in auto. Welcome to Highway Herald. What if the next global crisis didn't start on Wall Street or in Beijing, but from an EV factory in Detroit? With Trump imposing a 104% tariff on Chinese EVs in China, hitting back with bans and capital freezes, global trade is entering uncharted territory. Japan is backing off. Canada's changing course. The EU is eyeing retaliation. This isn't just a trade spat, it's a full-blown economic reset. And at the center of it all, the electric vehicle. Buckle up, here come 5 seismic EV shocks. Number 5. China slams the brakes on US investments, a direct hit to EV momentum. In a move that rattled the global economy, China has officially frozen all new investments into the United States. Beijing's State Administration of Foreign Exchange cited rising political tensions and the urgent need to safeguard national interests. In other words, the gloves are off. This freeze cuts off billions in capital that once flowed into American tech, real estate, and especially the auto industry. Electric vehicle frontrunners like Tesla, Rivian, and Lucid have long depended on Chinese investment to support battery research, innovation, and domestic manufacturing. The reaction was swift. Within 48 hours, the Dow dropped 1,700 points, and shares of Tesla, Apple, and Qualcomm slid sharply, rattling investor confidence. But this goes far beyond Wall Street. It's a direct hit to the US electric vehicle sector. Without access to Chinese capital, innovation slows, timelines slip, and production capabilities shrink. Even more pressing, China controls about 60% of the world's rare earth minerals, crucial to EV battery and motor systems. With those resources restricted, supply chains strain and costs rise. This isn't just economic friction, it's a pivotal shift. For American EV makers, the road ahead just got rougher. And China isn't the only nation making waves. Japan is about to drop a financial shock of its own. Number 4. Japan drops the Treasury bomb. Retaliation in the EV arena. Japan, long regarded as a reliable US ally and a leader in electric vehicle innovation, has made a quiet but significant move. It's reducing its holdings of US Treasury bonds. This shift is a direct response to the steep tariffs placed on Japanese EV imports under Trump's reciprocal tariffs agenda. Major players like Toyota, Honda, and Nissan are in the crosshairs. For Japan, the tariffs aren't just economic, they're personal. After decades of advancing clean mobility, being punished for exporting hybrids and EVs feels like a breach of trust. Enter the so-called Treasury bomb. By offloading US debt, Japan is applying pressure on America's financial system. The fallout? Rising bond yields, higher borrowing costs, and a less stable dollar, all of which feed back into the auto industry. As interest rates climb, so do EV production costs, especially for imported parts. That hits consumers with higher prices and adds more fuel to inflation. But Japan isn't acting alone. Canada is steering away from the US in its own dramatic fashion. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to bring you the most timely, detailed updates in the world of auto and EV news. Number 3. Canada cuts the cord, a rift in the North American auto chain. Canada, once a steady and dependable partner in North America's automotive alliance, is now drawing a clear line in the sand. What started as symbolic resistance, like removing American-made liquor from store shelves, has escalated into a full-scale reorientation of trade policy. The catalyst? Trump's aggressive electric vehicle tariffs and broader protectionist stance. In response, Ottawa is taking bold steps, canceling long-standing US-Canada trade forums, increasing scrutiny on American EV imports, and fast-tracking trade deals with Europe and Asia. The consequences are landing close to home. In auto-centric states like Michigan and Ohio, where cross-border manufacturing powers entire communities, this shift threatens jobs and economic stability. Once smooth supply chains linking Detroit and Windsor are now mired in political friction. At the same time, Ontario and Quebec are strengthening ties with automakers from South Korea and Europe. Hyundai, Kia, and Volkswagen are moving in fast to fill the gap. While the US faces rising inflation and investor jitters, Canada is riding 3.2% GDP growth and market optimism. For American EV makers, losing Canada isn't just a setback, it's a strategic blow. And just when things seem maxed out, China makes another move that could bring EV production to a standstill. Number 2. Rare earth squeeze, the EV sector's silent emergency. On the global trade chessboard, few moves have sparked more quiet alarm than China's decision to tighten control over rare earth exports. These 17 critical metals, like neodymium and dysprosium, are far from obscure. They're essential to powering EV motors, semiconductors, renewable energy tech, and even advanced military systems. China currently dominates over 60% of global rare earth supply, and its latest export clampdown puts the EV sector directly in the crosshairs. Automakers like Tesla, Rivian, and Lucid are already grappling with rising costs and limited access to these indispensable materials. For US EV manufacturing, the fallout is severe. Without these elements, battery production slows, drivetrains are delayed, and entire assembly lines risk stalling. Alternative sources exist in Australia, Brazil, even parts of the US, but bringing those online takes years, billions in investment, and major environmental hurdles. There's no quick fix. The market isn't waiting. Sticker prices are creeping up, and some analysts predict a 10 to 15% EV price hike if this squeeze continues. And with rare earths under pressure, the stage is set for the biggest economic shock yet. Number 1. Tariff avalanche. The recession warning lights are blinking. The US-China trade conflict has erupted into a global tariff war, triggering economic shockwaves around the world. Trump's 104% tariffs on Chinese imports sparked swift retaliation, a 34% counter-tariff from China, looming 25% duties from Europe, and rising trade barriers in Canada, India, and Southeast Asia. The fallout is mounting. US jobless claims have surpassed 240,000. The Dow has dropped 7% in 2 weeks, and retail giants like Amazon and Walmart are posting losses. Consumer sentiment has plummeted to its lowest level in 10 years. Meanwhile, the housing market is faltering, with rising mortgage rates, sluggish sales, and increasing foreclosures. Small businesses are strained by disrupted supply chains and surging material costs. In the EV industry, the crisis is especially acute. Rising raw material prices, delayed logistics, and shrinking demand threaten startups and are forcing major automakers to stall electric vehicle rollouts. Globally, concern is mounting. Morgan Stanley predicts a 2.8% US GDP decline, and confidence in the dollar is slipping. As every major player reacts, the question is no longer if change is coming, but how fast. The final lap, Crossroads of commerce. EVs in the eye of the storm. This isn't just a tariff dispute, it's a pivotal moment in global trade. As China restricts rare earth exports, Japan retreats from US debt, and Canada reshapes its alliances, the world's economic map is being redrawn in real time. For the electric vehicle sector, the stakes couldn't be higher. Costs are climbing, supply chains are under pressure, and international rivals, particularly in Europe and Asia, are forming tighter, long-term trade pacts while the US risks falling behind. The question now is whether the US will pivot strategically or dig in deeper. What's your take on this global shift? Will the rare earth crunch push the US to invest in its own mining industry? Are these aggressive tariffs a clever strategy, or a costly misstep for the EV market? Can the US build new alliances to replace lost ground? And how will startups and legacy automakers respond as pressure mounts? Is the future of EVs still electric, or increasingly uncertain? Share your thoughts in the comments. Be sure to subscribe to Highway Herald for more updates, insights, and everything automotive. Thanks for riding with us, and see you next time. You can now check out any of the videos on the screen. There's more exciting, eye-opening content waiting for you.